Good morning, everybody. Today is Monday, July 8th, and we are looking at the ETF SDS, which is the UltraShort S&P 500, right? So as the stock market moves lower, this should move higher. So, of course, the stock market's been moving up for quite a while. As you can see, this market's been moving lower. It's an inverse ETF of the S&P 500, but 2 times. So roughly every 1 full point in the E-mini S&P accounts for about a 4-cent move in the SDS. So this is what I'm doing here. This is a trade that I put on just a few minutes ago. Okay, right in here, right where we're at, right in here. Now this is a daily chart. I bought the SDS, okay, at $98.95. $98.95. Okay, bought it. My initial stop loss, ISL, initial stop loss, would be a close below the lowest low that you see on this chart right in here. Okay, that low is 97.45. 97.45. So a close below 97.45, I would exit this. Roughly the risk, R equals risk. I'm risking about $1.50 on this trade. So let me outline this for you, and then I'll kind of tell you the reasons. Okay, first profit objective number 1. I'm looking at 41.11. Okay, so I'm looking to make on that first objective roughly $2.16. Second profit objective roughly is $41.60. Looking at, what am I looking at there? What does that come to? About $2.65. All right, so this is the trade. Again, long at $38.95. Okay. So again, going long at $98.95. The stop would be a close below $97.45. First objective is $41.11. The second one, $41.60. Looking for this market, the overall market, to kind of come down a little bit. Looking for a rally up in here. Now remember, this high right here, is equivalent to that low of the pullback. Let me just show you on the SSO chart. So SSO is 2 times that tracks the S&P 500 to the upside. So this low right here, right, this low of 72.45 is equivalent to this high here. So it's reverse. It's an inverse. So let's look at the E-mini S&P 500. All right. Now, the trend obviously is up. Big time market pull back. We've had quite a bounce from this low up to this level. Okay. So I'm betting on the fact that the market will not be taking out this high this summer, but instead, so the market has bounced quite a bit, actually above, look at this, above the 61.8% retracement from the high to this correction low. So we're actually trading above, based just on the open, right? Market opened up higher today and above the 61.8% retracement from this high down to this low. All right, so we'll be checking this out. I'm expecting the market to kind of dip a little bit from here. So all I'm looking for here is I'm looking for a little dip. I'm looking for the market to come back down off of where we're at now, down to this level somewhere, maybe halfway back. Okay, a movement back. Maybe, let's see, if we draw a fib from this bounce from low to high, we're looking for a bounce or a movement back, a retracement from this high, maybe back to that 50, which would take us back to 1596. That would take our SDS up quite a bit. So that's what I'm betting on. I'm just simply betting on the fact. Remember, this is a probability game. I'm betting the market that will not be taking out this high here in the next month or so, but instead maybe consolidate a little bit and come down a bit. And if we come down a bit, what we'll see is this SDS bounce up to right in here, maybe even up to here. So again, the market will be back up to what, 43.32 on the SDS if the market is able to pull back down to this correction low. Now, will the market come down to this correction low? I really don't know, but but the probability is definitely favored that the market will come back at least to the 38.2 of this up move. So if we take this off, we just leave the fibs up from this low to this high, and comes back to the 38.2. That would take us below Friday's low of 1608, which would take us up to at least 4038 to 4092, which would be getting close to our first profit target. So that's really the only trade that I've got on now. Like I told you on Friday, I have sold a bunch of puts on the TBT, actually, since I was thrown out of this trade. I was kicked out of this trade while I was on vacation, and I'm not net long right now. But instead, on Friday near the open, I sold puts. I sold TBT puts at $75 that actually expire on the 19th of this month, picking up some money. Since I'm not actually net long, I'm going to collect the premium on the puts. Or if not, if I put the underline, I'll be long at 75, which will be right in here. All right. Actually, I sold rather the SSO puts at 76. The SSO, since I'm not long the overall market either, on this bounce, I actually sold puts at 76 that actually expire this Friday. So there's 76 puts. The market would have to drop down to 76, right down in here. Right here. Right? For me to actually put the SSO and actually own this ETF right in here. So I'm collecting the premium. And again, I've only got 5 days of expiration on this, so I'll collect money there. So that's what I'm doing. If you've got any questions, definitely let me know. The SDS right now is trading at $38.99, so I'm up 4 cents, big deal. I'll revisit this tomorrow, and hopefully I'll have something else for you. But just to reiterate again, I sold the 76 put, collected only 71 cents on that, and that was on Friday. It expires this Friday. And then I actually bought the TBT put. I bought those puts at $75 to collect only 57 cents. Again, since I'm not net long TBT, I wanted to profit or at least take advantage of this up move. So if the market does not come down to 75, I'll collect my premium. But if it does, that's fine. I'll still collect the premium and I'll be long this ETF. And the same is true for the SSO. So hope that helps. Have a profitable day. I'll talk to you tomorrow. Bye for now.